It's interesting. There is some softening, some cooling, but it's such an inconsistent market depending on which suburb or which city you're looking at.
Yeah, it absolutely is inconsistent. If you have a look at Melbourne at the moment, Melbourne and Hobart are our two weakest markets. Hobart a bit to do with the fact that population has really slowed to a grinding halt. Melbourne has a lot of additional taxes, which is really impacting buyer demand. Head across to Perth though, and you're looking at very different conditions. So it has slowed. We were looking at around 25% annual growth up till mid-year. It's now looking at about 19%. Southeast Queensland is still continuing to attract a lot of people. Adelaide as well. So they are slowing, but they're moving at a very different rate.
Where are we seeing more supply or potentially even oversupply at the moment?
The supply issue is interesting. I mean, most of it is on the urban fringe. So if we have a look at houses in particular, increasing construction costs have impacted the rate of development, but they have been able to get a lot of projects up and running, primarily because planning controls have been weakened to try and get more supply up into those regions. Apartments at the moment, though, we are seeing very little development. So we're still seeing a lot of approvals taking place. There is a big push from the federal government to try and get more apartments built, but if you talk to any developer at the moment, the cost of developing is very expensive. The cost to develop cheaper apartments in particular is a problem.
Is there a supply issue on the apartment side though? Because Melbourne has a tremendous amount of apartments. We see construction cranes everywhere in Sydney. Is this a matter of people just not wanting to live in apartments? Are they all full?
Well, it is a little bit to do with people not wanting to live in apartments. I mean, if you have a look across Australia, we're not used to it. We do like big family homes. We do need to get used to apartment living because average household size is shrinking, and the biggest increase in family type will be single-person households. At the same time, though, Melbourne does have a lot of apartments. A lot of them are full of students in particular, if you have a look at inner Melbourne. But head to places like Queensland, particularly Brisbane, Gold Coast. We are seeing faster price growth for apartments than we are seeing for houses. So what we're seeing in those areas, particularly luxury apartments, are still being built and still being demanded. A lot of downsizer activity in those sorts of projects. But again, coming back to affordable apartments, anyone looking for an affordable apartment to rent on the Gold Coast or in Brisbane is finding it really difficult at the moment.
Yeah, you mentioned students there, and that did shape up as a plank in the immigration debate because, of course, it's strong immigration that's been driving the population growth, been driving a lot of the demand. We're heading into an election year. Can you see that potentially changing?
Look, the student numbers have been interesting. I mean, if you have a look through COVID, it did lead to significant drops in rents in some markets, not all markets, but inner Melbourne really stands out as one market that we saw big declines. When students came back, obviously they filled up again, but at the moment Melbourne rents are starting to soften quite significantly because student numbers are pulling back. But at the same time, we are seeing less investment in activity, so the number of rental properties in Melbourne has actually declined quite significantly. So it is going to be a really interesting year, not just for student numbers, particularly for states that do rely on international students, but also for the housing market.
How quickly do you expect things to change once the RBA finally starts to embark on easing?
Well, we've had a look historically at what happens, and it is quite immediate that we see places like Sydney and Melbourne particularly jump quite quickly.
That's just a confidence boost, right?
Yeah, it's a confidence boost, but also a capacity issue. I mean, if you're looking to buy in Sydney and you could only afford $1 million and rates are cut, then that your ability to borrow a little bit more is increased. So it does make a difference, definitely, to how people are feeling about the housing market, but also their borrowing capacity does increase quite significantly when markets are super expensive.
You say only $1 million. It seems weird to have those words together in the same sentence, doesn't it?
I grew up in Adelaide. I mean, $1 million gets you a lot in places that are not Sydney.
Yeah, I mean, it is interesting. I mean, Sydney is extreme. I mean, I think it's second or third most expensive, or least affordable city in the world. But yeah, go to Adelaide and the median's half that of Sydney, and you can see why places like Adelaide are attracting a lot of people because they are so much more affordable.
What are we seeing from foreign buyers? I mean, clearly with the slowdown in China, it's probably a different demographic now. What's your experience been? Yeah,
look, it is very different. I mean, we are continuing to see a lot of buyers from Hong Kong, also Singapore. Like they tend to be the two, but they're no match to what happened with Chinese buyers. If you have a look back at the end of last decade, most development of apartments in particular wouldn't have taken place without that huge level of investment. So it is a challenge for Australia. I mean, we do rely, or we have historically relied heavily on foreign buyers to provide a lot of rental housing. We don't have that money here in Australia at the moment, so it doesn't, it does make quite a negative outlook for renters when we don't have a lot of rental properties becoming available.
The prices in Australia are, of course, sky high, and a lot of people have staked their reputations and lost them, calling for a correction. Is there ever going to be one?
Look, we always do see corrections, but every cycle we see the 30%ers come out and say it's going to drop by that amount, and it never does. I mean, we do see declines in Australian property prices, but they do tend to be quite mild. I mean, we are a country that does welcome immigration. We're not very good at building. We love living in big homes, so all of those things do make it structurally a market that does remain very expensive.
What if you get rid of negative gearing?
Yeah, look, it is an interesting one. I mean, it's interesting. I mean, the challenge with negative gearing is that it also does provide rental housing. So, absolutely we need to be looking at taxes all the time as to what their impacts are on housing. But, yeah, negative gearing is a very emotional tax, and a lot of people rely on it, renters rely on it, but at the same time it is likely to lead to much higher pricing than we otherwise may have seen with that alternative taxation. All
right, Nerida, thanks so much for joining us. That is Nerida Conisbee, Chief Economist at Ray White. We've got more ahead on Australia Ahead. That's every Tuesday, 11:40am if you are watching in Sydney, 8:40am in Hong Kong. Plus, you can tune into the Bloomberg Australia podcast, which delves into the biggest stories shaping the country's role in global business. You can find it on Apple, Spotify, or Bloomberg.com. More ahead on the Asia trade. This is Bloomberg.